landscape and the latest immigration-related homeownership guidelines, so we can better serve and support the families we all serve. By staying informed and productive, we can be stronger advocates, trusted advisors, and most importantly, part of the solution. Together, we can break down barriers and open more doors for those who may have thought homeownership was out of reach. Thank you all for being here, for your commitment to our community, and for the work you do every day to empower, uplift others through knowledge and opportunity. So without further ado, we want to thank PNC for being our sponsor. It is thanks to them that this event is happening. So welcome on stage, Rob Hirsch, Vice President, Amanda Lum-Hilaire with Southwest Territory Executive, Leslie Arnold, Area Sales Manager, Will Griffin, Nahrep Corporate Board of Governors. Sorry?
No, that's perfect.
I did.
Good morning.
Good morning.
Yeah, which one should I take? Is there one on the fly?
Yeah, or you don't have to. However you want to do it.
Good morning.
Good morning.
I really like coming to places and recognizing people. So Dallas is a special place for me. I was able to get my new Dallas pen today. I was able to turn in my Silicon Valley Nahrep pen and take over the Dallas one. So I will be representing Dallas when I go to all of my different places. So I'm very happy and pleased today. So we appreciate you guys having us today, and I won't take up too much time because I know everybody's really here to hear what Van has to say. So just want to give you a little bit about PNC and what we are, and you probably know us from BBVA, but we are one of the larger banks, and we do a couple things different, and so I'm here to explain those different things for you. Oh, Van, you're up. Did we get the slides different? So an overview of PNC. We've got Rod, who's our expert. A little bit about Rod. He's shy and doesn't want me to tell you anything about him. I've been in the industry for over 2 decades. I have a passion for home lending. I've seen a lot of people work very hard to get into a house, and I do thoroughly enjoy watching people in their house. We don't always get to see them pay off their mortgage, but I have been in the industry long enough to be able to take that last payment on their check. And so that is quite a fun journey. If you are ever able to do that, I encourage you to stick around. This is a video about PNC, but I don't know that we have audio. I'll give you an idea. We're coast to coast. We've been in the industry for a very long time. We're not one of the larger banks. We have 60,000 employees, but we're still number 6 in the nation as far as bank branches. We cover coast to coast, and we're in 30 large markets, 30 of the largest markets. And here in Dallas particularly, we have 99 branches with a commitment to build 20 more. So this is a footprint of our states, particularly down here in Texas. This is one of our fastest growing markets, as well as one of our largest commitments. Not only are we building 20 plus branches here in Dallas, but we're also expanding in Houston and the central coast, central Texas as well. We've got a complete lineup of products, home lending products, as well as different, Rod, I believe this one. Rod, I think you wanted to go over these ones?
No, keep on going. People,
Okay.
let's just recognize the right.
So one of our core values that we have, we live by 6 main different programs within our community, within our culture, I should say. So one of our values that a lot of people don't know is integrity. And when we go out and we do something, we do it with integrity. And that doesn't always mean doing the best thing for us, but it means doing the best thing for the customer and doing it with integrity. So we're not going to take the easy way, we're going to take the high road. Diversity and inclusion, we do still believe that we need to represent the community that we're serving, and we need to make sure that we do it in an inclusive way. Customer focus, from the top down, I can tell you every meeting I'm in, we talk about the customer first. If you've seen our head of retail, he wears a band. It's an orange band, and it talks about the customer. Customer obsession is what it says. You'll see it on LinkedIn quite a bit. We also talk about quality of life. Work-life balance. You cannot come to work if you don't have a family and you don't have a focus on your family. That's a huge thing within our culture. Respect. You come to work, you respect each other. Everybody has a say at work, and everybody needs to be heard at work. Your opinion matters, and we want to hear it. And it's all about teamwork. You don't get somewhere by yourself. You get somewhere because somebody helped you get there. So that's the way we work, and we do it together. We do offer all retail banking platforms, including commercial, mortgage, student loans, auto loans, full suite, as well as all the other large major banks. And then this is something that's pretty near and dear to my heart. I have 3 children. Something that scientific studies show is the human brain develops the most and the fastest in the first 5 years of life. PNC has set up an individual grant for children 0 through 5, and we pay within our own budget to underprivileged and underserved communities throughout our entire footprint. Our regional president's office goes out and supports programs within the community to help serve underprivileged children who target programs specific for 0 to 5. We don't go out and broadcast this. We don't do anything other than call it the Grow Up Great. So if you ever go to an event and you see us passing out booklets or coloring books, they're all targeting the 0 to 5 age range for that reason. Market materials for you. So when you do work with PNC, we do offer you specific materials. We go online, we build long-standing community areas, we offer residential financing homes up to 47, we've given out residential home loans up to 47 billion. We've done small business loans of 26 billion, and we've done community development loans of 14.5 billion so far. It is showing up there half and half. I thought it was just my screen. We offer an online agent portal for you when you're going through that offers you different tools and resources for your listings that show you what's going on. And it also allows you to speak directly with your loan officer and find out what's going on with your loan. It's a web portal just for you as the real estate agent. And then we also offer you different specified for your listing, yard signs, riders, just for your listing, open house flyers specific for your listing. And then we also offer the borrower special tools as well. They can get a pre-approval online. We can give them full pre-approvals. We also offer one of the few lenders that will do a soft credit pull, so that way they don't have to have a hard credit pull on their record, so they can go shopping. And then additional benefits, I already kind of gave it to you. You know, the soft credit pull is a pretty big deal. They can go around and shop without having that hard credit pull, because sometimes it takes 6 to 9 months before they find the right house, depending on what they've got going on. They also, maybe they need to fix something. But they can submit loan documents, they can get a full underwritten pre-approval too if they need to, because sometimes you have those borrowers that are in between. And then they also have a digital journey. They can track it all online, they can follow it along. We also offer them to be able to go in, fill out the application, and the loan officer can go in and fill out the application with them and help them along the way. They can follow it through the process with the underwriter as well, so if they have questions, they can go on and help them. So I will turn it over to Will, who I will tell you, this is a very special thing that you get to see him in person. I haven't seen him in person in 6 months.
She's being who she is. That was a jab, by the way. Good morning and happy Independence Day today for all of you that are part of that culture. God bless you. We thank you. In 1862, you guys were free from the French. We get it. And it happened so that my ancestors in 1863 received the proclamation, Emancipation Proclamation. Now, many of you may not know, this is Cinco De Mayo in Texas. They did not receive that news until 1865, hence Juneteenth. But this is Cinco de Mayo, and so I congratulate you guys for all that time, and God bless you. I am Will Idris Griffin with PNC, and I manage all of affordable lending nationally. And so a lot of what we cover and what we do greatly impacts what we can offer right here in Texas. This is a growth market for us, and we hope to partner and make lives better for many of your constituents and yourselves as well. And so within what we do, we have a department called emerging markets, which is a very popular term. Emerging markets, the way PNC defines it, is any segment of the population that has a home ownership rate lower than the national average. And so many of you may know, and I'm sure Van's going to speak to a lot of statistics and a few things there, but Hispanic home ownership today is about 47%, 47, close to 50%. It's been kind of flat. African American home ownership is at 43% today, 43.4%, and that number is lower than it was when the Fair Housing Act passed over 50 years ago. So we have some work to do, some challenges to overcome, and we're hoping that a byproduct of our meeting today, you'll have some tools, some resources to help some people and make some money. And so we're going to talk about quite a few things, and one of which will be product and program, naturally. 2, some resources that are available from the PNC portals. 3, some ways to help you do your business. And so I've also, I didn't say this, I'm from Chicago, so it's good to be in Dallas. It's good to be here. But I also lived here for about 7 years. I lived right in Los Colinas, and so I have some familiarity and some sensitivity about this area of our country. It is a great place, and you guys are great and wonderful, and we're hoping that you can leave here again with some resources. We got a lot of money to give away, and so we want to make sure that you guys utilize it and have your constituents take advantage of that which is available. There's a lot of lenders that are out here passing out money. Some of it is easier to obtain, some of it is a little more difficult. We pride ourselves at PNC turning our grants, our subsidies over in 24 to 48 hours. So again, if we give you a grant, you're gonna get it quick. And we can stack those things. And I'm not gonna go too heavy into the details, but we have a unique style of how we do business. We're a very big bank, the 5th largest bank in the country, but we still maintain a small company feel. And so there is some levels of not only intimacy, but we want to hear what it is that you know you need in Dallas. I read a lot of stuff in black and white. And so whether it's North Texas or South Texas or Fort Worth or wherever you may reside and where your constituents are, we want to hear what you think is best, including IT. You know that that's always something. And we do those here at PNC. A lot of folks don't know that. And so there's a lot of stuff. I won't ramble. I didn't know I was on program this morning, but I did want to get up and speak and say hello. Happy Cinco de Mayo. God bless you all. Looking forward to doing business with you, and let us know how we can help. Now, last thing before I go. I'm also a member of the Nahrep Chicago chapter, and I've been a part of the corporate board of governors of Nahrep for the last 13 years. And so I will tell everyone hello from Texas, and look forward to meeting and seeing you all, and God bless.
right, ladies and gentlemen, that is El Jefe, and Amanda is La Jefa. So I have the fun part. Let me tell you about the products and resources. Again, my name is Rod Hirsch, and I work for Will, and I go across our footprint, educating the real estate community on the products and services that we have to help you make a difference in what you do. So, just like Amanda alluded to, B of A was here for eons, and all of a sudden everybody woke up and saw PNC. So, does anybody want to know what PNC stands for? Does anybody know what it stands for?
No.
Okay, it's like, you know how you have Home Box Office, ESPN, BMW, GE, Kentucky Fried Chicken. They all have acronyms. But PNC has an acronym that's distinct to none. It means nothing. In 1983, two banks merged, Pittsburgh National Corporation and Providence National Corporation merged, and they became PNC. That's how PNC has evolved to become a brilliantly boring company it is now. So having said that, we're a full suite of mortgage products. We have fixed rate products, jumbo loans, VA loans with no credit score requirements. We have adjustable rates. We have FHA loans, 600 FICO score, and we have specialty loans, which I'll talk about. We also participate in rural housing, and we also, again, I mentioned no 600 FICO score with no lender overlays with FHA. I think I've seen them done as much as high as 56 debt to income ratios. So we're taking the gloves off, and we're really looking into provider affordability. We have a portfolio loan that doesn't have private mortgage insurance. Fixed rate loan. All we require is the borrower to have 1% or $500 or less into the transaction. This is a portfolio loan with a 640 FICO score. Now let me just say, this is our portfolio loan, so that means I'm sticking it on my books, right? It was, in the conception, it was 700 FICO score. Now I'm going to show you the strength of having an advocate working for you, Will. He advocated and advocated to get it down, because 700 wasn't heard of in this space. So he got it down to a 680. So we thought yay, we moved it 20 points. Then COVID hit. It shot back up to 700. Then COVID normalized, and we're still fighting and advocating. It's down to a 640. You don't really see too many lenders sticking a portfolio product in their portfolio at a 640. Normally there's a trade-off, right? You got to give me a 700 and I'll do this. So you give me a 740 and I'll do more. But we're saying, okay, we're going to meet you where you are, 640, and we'll lend you money. Down payments can be a gift, 100% gift. It can come from the seller. It can come from the down payment assistance program out there, the city of Urban, Texas. We can use all that for the down payment. So the borrower, again, only needs to have 1% or less than 1% of $500. Now, this is what I'm most proud of, and this is why we brought our favorite GSE here. We lend to both Fannie and we love Freddie. I mean, vice versa. We love Fannie. No, wait, we love Fannie. We love Fannie and we work with Freddie. Okay? Let me clean that street up. But so we asked Van to come because she, believe it or not, that is our go-to product. We deliver a lot to Van and Freddie Mac. And so we have a program called Home Ready, and we also do DBA with her counterpart, but the HEART program is Home Ready, and she's going to talk about some of the enhancements that they have to make home ownership easily attainable. Also, we have several down payment assistance programs out there. So basically, we're going to give you a down payment. We got buckets, right? So you're going to either get a $15,000 down payment if you're geographically located, a $10,000 down payment based on your geographical location, $7,500 based on your geographical location, and $5,000 based on your geographical location. The reason that the denominations are going up and down is simply the importance of it, not bad, importance is a bad word, but the need that the bank has. But basically we have money to give. Last year we gave, what, $16 million? $16.5 million. The year before that, we gave $16.5 million. And I can truly say, since I've been lending at the bank since 2011, we have not ran out of money. And that's the advocacy of Will pushing the needle, saying we need more, we need more, we need more. So we're lending money, we have money to give. I don't know how many people are just giving monies away, and we're not taking second lien position. That's another thing. So that's a interesting topic. But we also partner with FANNIE with the low income grants. So those borrowers who are 50% low median income, and I'm sure Van will talk more about that. Well, we'll give them, we can stack their $2,500 on top of what I'm giving. And that's it. That's my wrap up. That's a full suite of everything that we have. And I'm going to turn it over to, thank you.
Let's see if I can figure this out. Sorry. Now we would like to welcome on stage Vanessa Randolph with Affordable Lending and Mission Relationship Manager with Fannie Mae.
Ladies, can I share your table? Of course, thank you. I may or may not need my notes. Good morning. Good morning. Good morning. Good morning. Okay. Buenos dias. Buenos dias. Hey, bienvenidos. And that's as good as it gets. Good morning and welcome. I want to share with you a bit about some of the things that Fannie Mae is doing. I don't know who's running the slides, but if you can take me to the next slide, I appreciate it. Again, I'm Vanessa Randolph. I am the Affordable Lending and Mission Impact Manager for the large depositories, which PNC is a large depository, and they're very important to us. So when PNC says show up in Dallas, Texas, guess what? We show up in Dallas, Texas, okay? So I'm so thankful and grateful for the opportunity to be here. I thank not only PNC, but I thank Nahrep. Ben, you have been wonderful. I thank you for inviting us. Mr. Bingham and Rod came to us about, I don't know, maybe 3 months ago and said that they wanted to do something with the local chapter here. So you are important to us as well, and thank you for showing up this morning. Showing up in force too. I love the look of this group. So, and Lori, and Michelle, would you stand up? I'm joined by two of my colleagues, Michelle Jefferson and Lori Jefferson. And they're going to be at the table outside the door, so in case I miss something, please stop by, and we'll be happy to answer your questions. I'm on a time clock, so if I talk fast and it sounds like gibberish, please slow me down, okay? Please slow me down. Again, I wanted to, try to get the slide advanced, but if that doesn't work, I'm gonna go ahead and start. I want to start by giving you 2 disclosures that I must give you, and so please bear with me. First and foremost, what I'm about to tell you today is intended to be reliable and accurate, but I am a human. So in the event of any discrepancies, I do ask that you refer to Fannie Mae's Selling and Servicing Guide, as they are our official product guideline source of information. And that you can find on fanniemae.com. Okay, so I want to get that out of the way. The second disclosure I want to share with you is who and what Fannie Mae is. Does anybody want to take a stab at giving me your best explanation for who we are, what we do? besides PNC? Anybody? Ooh, loving this, no hands. Nobody wants to challenge me on that. Okay, first, Fannie Mae was chartered in 1938, and we were chartered to be a reliable source of funding for banks all across the country, meaning for everyone. That was our mission, that was our charter. Since 1938, guess what? We're still doing the same thing. So if you have any doubts in your mind, let me clear them up today. Fannie Mae is still here to provide financing in support of low and moderate income borrowers. Okay? Because they're getting a lot of, clap right now. Thank you. Thank you. I can do this myself. Okay. Let's see. Say it again. Maybe, where am I pointing?
Sit back behind.
Oh, I gotta go like this?
You want to drive for me? I'll drive. Sit back.
Please. Okay, you can take me 2 slides in. Okay, here's where I am. Okay, again, today we're here to do the same thing. And it's important to us that you understand. We do not originate loans, we don't take applications. What did I say? Say again? That's it, baby. We don't take applications. We do not take applications. I want to make sure you understand that, okay? We do not meet with customers. That's PNC's job, okay? So, but what we do is we back those mortgages. The bank makes the loan, turns around and sells that loan into the secondary market, which is Fannie Mae. So we provide the source of funding to keep the housing market going, okay? As simple as it gets, okay? Next slide. Today I want to cover a lot of stuff. I want to talk about Home Ready. Home Ready is our flagship low and moderate income product. I want to talk about the benefits of Home Ready. I want to talk a little bit about the eligibility of Home Ready. We're going to talk about Home View, which is our free, what did I say? F-R-E-E free home buyer education tool. We're going to talk a little bit about the product that has down payment assistance, and maybe we'll do a summary. Depending on when I get the 5-minute flash from several people I've told you. So with that, next slide. I've already told you who and what Fannie Mae is, but I want to tell you what I believe should be important to you is you are so crucial to what we do each and every day. The industry professionals are, again, also an extremely important factor in keeping the housing market afloat. We do customer sentiment surveys on a regular basis, where we meet with renters and potential home buyers. And traditionally speaking, we've been doing them for years. Most people still do not understand this process, and about 50% of them miss answers on something like, how much of a down payment do you need to buy a house? Several of them are still saying you need 20%. I sit behind a curtain where we've done sessions and just listened to people with all of these numbers as high as 50% is needed down. People don't understand. Also, for the debt to income ratio, when we ask people how much debt can you have and qualify for a mortgage, they also, 50% of them miss that question as well. So let me just tell you, with Home Ready, you need 3% down, and your debt to income ratio can be as high as 50%. Like to see it at 45, but we can stretch to 50. Okay, so I'll clarify that in this room. Also, there's a lot of products out there, and we know that's a lot of stuff to retain in your heads. But because you are so important in this process, you are the consumer's trusted advisor. You're the #1 answer when asked, who do you go to for advice? It is the industry professionals, realtors, and lenders. So please, as the trusted advisors that you are, take this seriously. And we ask that you do your research, your homework, and know which product is really the best fit for your client. Side-by-side analysis, please. We don't care if it ends up being an FHA loan. If that's the best thing for the customer, so be it. But we do ask that you slow down just a little bit, because this could maybe be your first-time home buyer who is going to be your buy-up home buyer. And that cycle continues. And they will trust you and come back to you. So please, again, you are important to us. Next slide. Okay, so what is Home Ready? Again, Home Ready is intended for credit-worthy, low and moderate income buyers. It's also intended to help buyers who previously could not become eligible for homeownership. So we've created a few flexibilities, shall we say, and I'll talk about them shortly, to allow for more people to get into housing. It is a 3% down payment program, again, intended to help those that were previously not allowed to be a part of the market. We do have a 80% AMI requirement on Home Ready, depending on the subject property address. And if you don't know how to get to that level, can I get the next slide, please? We have what's called an affordable lending Home Ready lookup tool. And so you can go to FANNIE and go to the AMI lookup tool. If you have an address, that would be perfect. But if you don't, you have just a zip code. Put your zip code in it. You put that in there, and what will show up is what's on the screen. And I hope that you can see it. But I ran some numbers for, where am I? Irving, Texas. Actually, I ran the numbers for this address, 1701 Kenwest Parkway. You know where I am? Okay. And what came up was the top number was 107,000 is considered 100% of area median income. 87, I can't remember, 87,000 and something was considered 80%. And then it gives you that 50% number. So you're seeing three different numbers when you run this. So you don't have to guess. Is this borrower's income going to fit into the box? We have a tool to help you. And in this market, 50% of the area median income was $53,650. So you have to remember the low number. So that's the kind of thing that we're asking you to check to see if your borrowers are eligible. Next slide. Home Ready benefits, big picture. We now provide $2,500 in down payment assistance. Rod has already touched on that a little bit. If the borrower's income is at or below 50% of the area median income. So $2,500 down payment assistance, not to be paid back. It can be used for closing costs and down payment, okay? We also, again, do the 3% with Home Ready. You do not have to be a first-time home buyer. What did I say? You do not have to be a first-time buyer. You do not have to be a first-time home buyer. We allow for flexible sources of income, which I'm going to talk about. For instance, you can do boarder income, rental income. I'm going to talk about that in a moment. Rest of this, I'm going to skip down to homeownership education. Homeownership education, very important. I know a lot of people kick and scream, and it is the elephant in the room, but it does show in statistics and in some of the research that people who undergo home buyer education have better results in sustaining their home. So it's really important that we offer that. And I'm going to talk about our home view in just a moment. Did you bring me back, Rob?
Yeah, I
Not a problem. Okay, so let me talk a little bit about some of the flexibilities. Oh, thank you, that's where I am. Okay, so another thing is we create created or an enhancement to our an enhancement to our home, ready, product. It's under DU, which is our desktop underwriting, automated underwriting system. We have built in the ability for borrowers to introduce their positive rent payments, their on-time rent payments. If your buyers have paid their rent consistently for the last 12 months, and they pay at least $300 a month, what did I say?
At least 300.
At least $300 a month, and they have never missed a payment, and they are going to occupy the property, then they need to say to the lender, empower them, I'd like you to consider my rent to help maybe boost my credit. We have seen people go from an ineligible to an approved eligible, just by introducing their rent payment. So that's all I'm gonna say about that for now. I've got probably 2 minutes. Rod, I'm going to ask that you skip some of the next few slides and take me to the slide that has like the 3 products. Keep going. As he's doing that, let me say, I'm happy to share what the eligibility is. I'm happy to share what the eligibility is for Home Ready. Certainly want you to understand, again, all of the different flexibilities that have been made, but I don't have time, and hopefully when I start talking to Rebecca, we might be able to cover some of that. But bottom line is, we are making stretches again, so more people can get into affordable and sustainable homeownership. Again, I mentioned our HomeView home buyer education course. It's free, online, available 24/7, meaning that borrower can complete it at any point. It doesn't have to be done like all at the same time. It takes them about 4 hours to get through it though, so you should know that and explain that to them. Next slide. Next slide. 2 things I want to share with you again. As I said before, it's so important for you to do your homework when you're trying to qualify our borrowers, because we don't want to put them in something that's ill-fitted and then they have problems instead. So this is a scenario, just a side-by-side where we're comparing our own products. In addition to Home Ready, we have a Fannie 97 product, again, 3% down. We also have, if you're dealing with some of the housing finance agencies, we have a special program there. In the case of Home Ready and the HFA program, we have reduced mortgage insurance coverage. We have cancelable mortgage insurance. So when the borrower reaches 80% or less, they don't have to keep paying the mortgage insurance. It's canceled. So you should know that. And it's discounted. So that means you're going to have a more competitive edge getting that borrower into a home at a lower price. The other one that I wanted to mention was FHA comparisons. I got the slides, I think, backwards. But remember I said mortgage insurance is cancelable with our products. It is not cancelable with FHA unless you go through a bunch of hoops. So if you have a borrower who's been in a home for, let's say, 5 years, and that mortgage insurance gets dropped, and I'm using a scenario of $250,000. When that mortgage insurance gets dropped, probably appreciation now is even faster than 5 years, but let's say 5 years. If that's gone, it could possibly, on a $250,000 mortgage, save your borrower about, I think it's maybe $64 a month, but you times that if it's a 30-year mortgage, over 300 months, that's almost $20,000 you just saved your borrower. And you can put that scenario in front of them and do the math with them. So again, your research, your homework is so important to us. And with that, I'm probably out of time.
But you're gonna stay there.
Stay here. Okay,
So matter of fact, grab a seat.
okay, we can do that.
So welcome on stage for audience Q&A.
We have one mic this year.
Hello. Okay, great. Hi, hello. Great job. Just for those who don't know me, Rebecca Steele. I'm not the COO of Alpha Flow anymore, but I have been in the mortgage business for 30 years and have sort of watched from afar Fannie Mae do its thing. And thank you, Vanessa, for being here. One of the things I want to start with is your comments about education. Yes. Because one of the things, like from the early 90s, education was always important because it was so difficult to understand these products. There's 200 products, there's, all these things like LTV, I call it demystifying sort of those things about the loan. Like, I just want to know how to qualify. How do I get to my home? And one of the things I think Fannie Mae has done really, really well is develop education, promote education, be here at these types of events, et cetera. But even more so, just be there to make it simple and demystify this process. So with that, let's talk a little bit more maybe about how you do that. How do you really help people understand when they think a down payment is 20%, and it's really, you can qualify at 3%. How does that work? Tell us.
Great question. Thank you, Rebecca. So indeed, education, again, we don't do anything in a vacuum. So Fannie Mae has conducted a lot of research, talking to consumers and lenders and everybody that's a part of this, this process. And in doing so, we developed our own proprietary homebuyer education. Now, that's not to say that you can't use another national industry certified education product. That's okay with us too. That's not to say you can't use the HUD counseling agencies. That's fine too. We do want the housing education course to be something though that is certified. So again, we felt in talking to people that it was best that we offered them something again. Ease in access was important. That's why it's an online 24/7 opportunity. The other reason I think that we felt so seriously about this is we were seeing people, of course, lose their homes and not understanding how they even got into a product. So we do provide post-purchase, post-mod. When somebody is in trouble, we try to get them into counseling to help them maintain their homes as well. But demystifying it, with the courses that we have, we've got 7 different, shall we say, modules. And it starts even before you buy a house. It starts with buy versus purchasing. It starts with educating people about debt, income, down payment, what loan to value is. So it's written, honestly, I believe, at a 7th grade or 8th grade level. Lori or Michelle, correct me. But it's intended not to be over anyone's head and that they would be able to understand. And then, of course, there's you, the realtors, that they don't understand. They may come to you with that question. The lenders, they may go to the lenders with that question. But definitely, we have a lot of online support.
That's great. And one of the reasons I ask is I spent 4 years in Washington, D.C., running the NFCC, which is the National Foundation for Credit Counseling. And there we helped 1 million people every single year really understand what they needed from the budget perspective, what a budget was, setting up a budget. Yeah, it's the simple things, one step at a time. And Fannie Mae, as well as Freddie, helped us do that work. So very, very important. And I think the one takeaway that I would have here is help your clients and your borrowers get help. Like, just help them, make it simple, demystify it for them, and handhold them, because sometimes we're running around quickly and we don't have time for that really makes a difference. So let's move on to the next question that I have. And this is something from the early 90s that, I always wondered, being a lender at one of the large banks, okay? Why are we not allowing rental income to show in credit? People pay their rent. They've been paying rent for generations. And it's really, really important that people can manage their budget and rents. So I, about 5 years ago, was super happy when not only Fannie and Freddie, but also the credit bureaus decided that it was time to do this. Long, long overdue. So let's talk about rent and how to get people into their first home and how to make that successful and sustainable.
I will tell you, we're talking about home ownership today, but Fannie Mae also is chartered to help renters. So we do a lot to help renters understand their rights, their rental rights, helping them to understand what they can and cannot do as a renter is also seen as equally important as when we enter the home ownership space. And why do you think that is? Because most of those renters are seeking to become homeowners. So if their track record isn't so great as a renter, what do you think their success rate would be as a homeowner? So we do a lot in that space as well. We allow for positive rent payment on the rental side of things as well as on the home ownership side of things. And we have seen by allowing rent, because we pay our rent. When I say we, I'm talking about you and me, okay? We pay our rent, we don't pay anything else. When we see ourselves introducing that rent, what we show for success in the last couple years is over again, 8,000 people were allowed to come out of an ineligible DU finding to an approved DU finding. So again, talk to your clients. Make sure they understand. They may say, hey, I might have had a hiccup somewhere. When they give the lender permission to go in and look just at their bank, it has to be on their bank account or it can be on a credit report. But when the bank takes your client's permission and goes in and just looks for that, whatever it is, I pay $400 of rent. That's all they're looking for. Assure your client they're not in there looking for any derogatory information. They're just looking at the rent. And if they can see 12 months consistent at $400, then that's where it gets entered into DU as an enhancement to help boost that borrower's credit.
Yeah, I think the rent piece is such a game changer, and it's scary for people because they're like, I don't want to report my rent. What are you doing with my rent? What are you doing with my data? But it's the wave of the future. We want more home ownership. We want generational wealth. And Fannie Mae is here to help us do that in a sustainable way. Very, very important. So I know we don't have a lot of time, but we've talked a little bit about down payment assistance, and I do want to hit on that. Because down payment assistance has been a dirty word for a while. It's like it's too hard, can't do the files, costs too much money. You hear all this stuff in the market. Is it real? Why would you give me $2,500? Is it a scam? Well, there's lots of scams out there for sure, so you have to be careful. But down payment assistance is here and it's here to stay. And it's here to make housing more affordable when other things are going the other way, quite honestly. So I would love to hear your point around down payment assistance and how we make that easier for realtors, for lenders, for others to really understand that and understand how to execute that and make it real.
Thank you for that question. So I've already told you, excuse me, that Fannie Mae is providing up to $2,500 for people who have incomes at or below the 50% area median income. In addition to that, we have a down payment resource tool. It is intended for your clients, consumers, it's intended for realtors, for lenders, and that tool can be found on fanniemae.com. But what it does is it provides down payment assistance resources all across the country. So if your borrower goes in and there's like maybe 6 or 7 simple questions that they would have to answer, nothing that's gonna be private or identifying them. They don't need to know their name or anything. But let's say they wanna buy a house at, I don't know any other address, guys, so at 1701 Kenway Parkway. They would put that in the tool and it would come back and it would show all of the entities that have down payment assistance money available in that area. And that list, the borrower could click on the individual entries and it would find out what the eligibility requirements are for each of those down payment programs. So it would be like your state housing authorities, it would be like some regional, there might be money at the city level. And these are sources that have been verified as being reliable and not scam artists. So we provide that free because we think you need to know. Everyone has to know where they stand with down payment. That's the big push right now. People are stuck. They are stuck because they do not have the down payment. But if they can get over that hurdle, they can probably do it and be just fine. So we provide that as well. And we allow down payment assistance programs to be used in conjunction with our products. So as long as that lender does the check and make sure, again, it's a reliable source, because we don't want to be involved in putting anyone in harm either. But the lender checks out that local nonprofit or what have you, and they can introduce that down payment assistance as well. They would be a second behind our first mortgage. But we definitely encourage people to look for the money.
Great, I want to thank Vanessa.
I want to say,
Oh.
it's not every day that we have somebody with this wealth of knowledge. So we have time for like 2, maybe 3 questions.
Okay, 2 or 3 questions for sure. My apologies, I was throwing her off the stage early. Would love to have a couple questions. Yes.
What is that website where we put in the address and then we find the government assistance?
Okay, it's called the lookup tool, the AMI lookup tool. I believe that's what you're looking for. So you can find out what the income is. Yes. It's on FANNIEMAE.com. Even if you just Google Fannie Mae AMI lookup tool, it will come up.
And can I just say one thing about Fannie Mae's technology? Because Fannie Mae has been a leader in technology for a long time. And one of the things that's so great is you can go on their website, not only the AMI, but there's lots of other tools. They're working on appraisals, making appraisals easier. Just really fantastic work, and thank you for that investment. Appreciate that.
Commercial person, hey.
Another question, please.
Just to play devil's advocate for 1 second, what is the default rate on products that have had DBA?
That question I am unable to answer. However, I'm not going to leave you with a cliffhanger. If you want to pursue it, I'm going to ask that you reach out to my communications colleagues at the Fannie Mae newsroom. So you can go FannieMae.com in the newsroom, because I don't have the servicing background to answer that question.
Can I just add to that Habitat for Humanity, who I've worked with for years, also has some really good resources and understanding around, what they use to ensure that homeowners who are low income can have a sustainable mortgage. So you might also want to use that as a resource.
Will?
Can I make a comment to this question? Can't answer the Fannie Mae, but borrowers through PNC who receive our grants and subsidies have a less than 1% default rate with their loans. So we educate up front, we make sure that the individuals are, 1, mortgage and 2, sustainable within themselves. They're doing fine, by the way. And I'm always concerned when questions like that, not that you look at it in a different type of way, but we want to encourage the lenders to help, because many folks have the willingness and the ability to pay their bills and their mortgage, but it's hard to save for down payment. So if we can help someone who can make the payment DPA is not a precursor to default. And so that's been the case particularly in the Hispanic community. You guys pay your bills, own your homes, you got to capture the equity, you create multi-generational wealth by virtue of some help sometimes. And so I encourage you.
Can I just say one additional thing? So a lot of those down payment assistance programs are for first-time home buyers. And we've recently done research to support and to change how we do our underwriting in DU. So first-time home buyers are not considered a higher risk. In fact, they are a mitigating factor. This is hot off the press. We have built into DU to look for first-time home buyers because first-time home buyer loans perform much better than those who are not first-time home buyers. So that's number one. We also did the same thing. We flipped the script on student loans. Student loans used to be something that would also be considered a higher risk. But again, in doing the research, we found that student loan holders actually perform better than people who don't have student loans. You know, the same thing with revolving debt. Again, used to be a little bit of a drag. Now it's considered a mitigating factor. These are not having any impact on the performance of our loans. So that's as close as I can get to tell you about performance. If you package it around those characteristics, those loans are performing better than our general book of business.
And I made one more comment.
Shouldn't ask that question.
38% of mortgage originations are projected to be to first-time home buyers. So what's the difference now? They're older. So now we have a person of 55 and older being first-time home buyers, and these folks have a less than 1% default rate.
Can I ask a question first? What is DU and ASU? Those things acronyms you use?
DU is desktop underwriting. It is our automated underwriting tool. You know, we can't do as many loans as we do manually. So we built a system that helps us to put loans in and make sure that they are in according to our guidelines. And we give guidance to lenders based on how we build DU as well. So and an AUS is just an automated underwriting system, which again is what most of our guidelines are built around.
And I would say DU, if this is right, is also helps with fairness. Like it helps underwrite consistently. It's an easy tool to use for loan officers. If they're using DU, you'll know that there's a high degree of confidence around that. So.
I got one more question.
Yes.
Why are you overafraid?
Oh no, not gonna touch that one. The question was why Fannie Mae over Freddie. So all I'm going to say is again, we were chartered in 1938 to provide a reliable source of financing for everyone across the country. We've been here for almost 90 years. I'm not going to tell you how long my counterpart has been here, but I'm going to suggest it was in the 1970s. So I'm just saying. Okay, and with a lot of our technology and a lot of the enhancements and the flexibilities, we're usually first out of the chute. So I'm not trying to compare us or say that one is bad. We're both trying to do the same thing. So that's how I'll leave that.
Yeah, I like that. Danny Gardner is a friend of mine. So, yeah, I mean, both Fannie and Freddie have a lot of great tools, have the best in mind, and will continue to innovate. I would say that's fair, isn't it?
To continue to innovate.
Yes, sir. You talked about renters helping people that are renting become homeowners. I have several clients that are transitioning from being voucher holders, and there's a fear of not being able to later on buy a house because they don't think that their history of renting is sufficient. Have you worked with people that way, or how can we educate them to be homeowners, because they are ready, they want to transition. We have veterans holding Section 8 vouchers. It's just not for low income. And people want to buy, but what they hear is that, oh no, you don't have enough credit and your rental history may not be sufficient.
So we have, non-traditional credit enhancements built in. If somebody doesn't have a credit score or they don't have any accounts at all that we can track, we still are happy to serve that client. So that's number one. We have, some restriction on, if they live in the house or don't live in the house, they have to be owning and residing in the home. It has to be a purchase. We won't do refis or anything like that. But we absolutely look for those customers. We also accept borrowers who have the housing choice voucher. Now, the issue becomes the lender has to be able to accept two payments, right? Because part of the payment is going to come from the housing authority and part of the payment is going to come from the borrower. If the lender can't service that, then that loan probably won't make it to us. But we have no restrictions on housing choice voucher clients.
Can I chime?
Yeah.
I'm sorry.
Yeah, glad you're here.
We have some of the best mortgage loan officers in the industry right here in Dallas, Texas. PNC is a Section 8 voucher lender. We do that business. We also encourage those that have a DD 214 with their VA to utilize. There's no down money, there's no money down. And so everything that's out there, in addition to that, we have a PNC community mortgage, which we didn't go into a lot of detail. It's our portfolio product. We can do no credit score. The borrower has no credit score, they pay their rent, they pay their cell phone bill, we can create that profile and fund and originate that loan. So I encourage you, those of you that are in the audience, speak with the PNC mortgage loan officer, raise your hand, please. They know what they're doing. And so all those things, Section 8, DD 214 VAs, no credit score, we can do those loans.
And some of those loans can be sold to Fannie Mae.
No price add. It's just, we're not gonna penalize you because you're on the credit score.
That's right.
No, we're not gonna, you don't have a credit score, so now you're gonna pay a slightly higher interest rate. Not here. You're gonna get the same thing as this person over here getting $1 million, $800,000.
I think that's a good place to wrap this, I think.
Can I just say one more thing? Please be open-minded. Share what you've heard with others. It is so important. We cannot do this alone, and we do need your help. So please, whatever you have questions about, reach out to us. Send your clients to PNC and to your local lenders and say, make sure this goes through the Fannie Mae process, because that way we'll be able to know if we can make it. And we'd like to hear feedback from you as well when you start doing this. How's it going? It's important to know.
Amazing, amazing. Thank you, Vanessa, for being here. Thank you, Fannie Mae, PNC, Taylor, and really appreciate it.
Thank you so much.
We want to thank PNC because we would not have Fannie Mae here if it was not for them, bringing them in. So thank you, PNC, once again. Thank you for helping us put on this event.
Up next, we have Nahrep 10. We'll want to welcome to the stage the moderator, Maritza Ferlin. Maritza, you ready? And our speaker, A.T. Almeida.
Great, thank you everybody for coming, and this is a pleasure and honor to be in this panel, especially with AT, which I know is story, and I love it, and that's my honor, and I'm very humbled to be here today. Hey, Steve. Oh, I'm very happy. As you passionate leader, educator, past president, and entrepreneur, and I was helping Nahrep Dallas to shape through these years and very successful founder of a real estate team. You laid a foundation of generational and for your family, and you still training and helping others to make sure they do the same. To me, and a lot of people ask, why keeps you active and involved with Nahrep?
Well, Marisa, thank you. First, the honor's mine being here with you, seeing where you come from, and have you been, where you are today, vice president for the Nahrep Dallas chapter. I think that's pretty amazing. And who never heard her story should take a minute, connect with her, and ask her, because it inspires as well, it inspires me. And that is part of what keeps me involved with Nahrep. It's always, I always say that in business and life, you always have to have some, something or someone to chase for, something to fight for, and something to look forward to, right? And what I chase for is, it's a higher myself, right? Either in business, leadership, and also for my family. What I fight for is for the Hispanic community. And homeownership for me is big when, bring to the Hispanic community, because that's the gateway to build generational wealth. Our Hispanic community comes from very humble beginnings, most of us, myself, and where we didn't have enough information about what is money. Back home, like everything that I thought about money, and my parents was teaching is like, work hard, pay bills, and if there's a little bit, then you can enjoy life. And that was the concept. And when I came to the US, it was that mentality, okay, we'll go to the US and, the country of opportunities, save money, and then go back to my country to do something with it. That was the mindset. Not knowing that there's still a lot of immigrants with the concept that came here to, get something back for their life. And I see them sending money every month because the dollar is really good, sending that money back home to, to invest in this, where they're not known that the big opportunity for them to keep that money invested is here in the US. So there's a lot of new information. So, and what keeps me involved in our effort it's uplifting other people, just like you yourself. I remember when you used to come to our chapter that's to record, to just do videos, put it in social media and all that, working 2-3 jobs, single mom of 6 kids, and now seeing where you're at. That's inspiration. That's the inspiration why we keep involved in art. And that's what the inspiration that a lot of people here in this room keeps involved. It's not just, I would say, like, make yourself successful, well connected, but also that opportunity to give back and see others grow.
Well, thank you so much for that. But today we are talking about you. But thank you. You are certified training for Nahrep 10. What does that mean?
Yeah, so the Nahrep 10, it's a program that was put by Gary Costa along with the Hispanic Wealth Project. 2014, Nahrep, Gary saw that after the Hispanics lost 2/3 of their household wealth during the crisis in 2008, 2009, he saw the homeownership was not enough. We had to look beyond that. We had to look in a way where the Hispanic community, their wealth was not just in the house. But they need to know more like about how they could start generating wealth and how they could pass to their kids, because that's the most important. It's not just what you accumulate for yourself, it's also what you're going to be able to pass along. So, And that's why he had the idea to create the Hispanic Wealth Project, which is it's a for-profit organization, not like Nahrep, that's nonprofit. And then he came with the 10 principles that can guide, that can help someone to understand what wealth and prosperity. So, and those 10 principles, we have many testimonies in the organization that how those principles able to help them. Myself as well, when I first got in real estate, I saw this money coming in, and I was like, okay, all my mentality is like, buy boat, buy, something, and all that. And then 2008, they came in contact with the Nahrep team, which I started seeing, different, and start putting a plan, like, uh, and saving more money, especially for taxes, like the retirement plan and all that. A lot of us in real estate don't think about. So, and then that paid off when the pandemic came. My wife has a salon business that never closed, and she was shut down. And that comes the time when you're, freaking out, like, okay, what's gonna happen now? Well, at least for, we can go by, for, a few months, we save money and all that, but that's about it, is to have an understanding. So, of what really is, especially our step principle number one, which is have a mature understanding of a wealth and prosperity, because the one with the most toys usually loses. And it is true. We've seen so many people, like, not just regular based, like us people, but like athletes. How many athletes do you see in the news that sometimes they get a big contract, and all of a sudden they're like spending and all that, and then they get hurt, and then they end up filing bankruptcy and all that because they didn't have the right guy. And the Hispanic community, that's what we need, is this information to pass along, to teach our kids, especially the young generation that's in schools, about what's going on. And if they do learn a little bit of these principles, financial leaders, I think that we can have a better future. And that's what I look forward to. It's a future where our kids and our grandkids can, be more successful, more well than we were back in the day.
And you are a very example of those disciplines. Also, you touching that point of young generation kids, and we will have in San Diego, is Proximo, where is the big convention for Nahrep, and we able to bring our kids, especially teenagers, so they can see and realize what really we're doing and what kind of future they can build. And we can help them because we love our kids. If we're doing some great things, we want them to do greater. So
and that's I think it's one of the most exciting things I am for the next conference in September, is that it's not just going to be about us professionally. So Nahrep is creating sessions for our kids, young adults, we call it, being able to come and watch and in a different way where we use the same conference and connect also with the young athletes. Because the Proximo is going to focus in athletes, Hispanic athletes, Hispanic musicians, how that they can do better for themselves, prepare for, like a retirement plan, or improve their wealth through real estate, through other ways, just basically, like investing in stocks and money. But I think the most exciting is that opportunity to bring our kids to learn about what we do and learn how that they can get more empowered as well, and connecting with people that they just sometimes just see on social media, on TV, and they be able to participate. I think that's going to be very exciting. So
I'm excited too. If you want to know more information about what is the next big events or our local events, you can go to Nahrep.org, and you can find all that information up there. What is the Hispanic Wealth Project in Nahrep?
Yeah, I think that's what I was mentioning earlier is, the organization that Gary created to, what the goal was in 2014, after you see 2/3 of the Latino household wealth being dissipated, the goal was to help triple the next 10 years the Latino household wealth, which in 2010 and 2014 actually was average of $15,000 per Latino household wealth, not income wealth, which majority of those was in real estate equity. So happy to say that 10 years, which was last year, now the Latino household wealth, it's almost 4 times than it was 10 years before. So, and Nahrep, collected that with their own members, and we found out that 19% of the Nahrep members, they're actually a middle. They have over 1 million in net worth. So, which that's pretty impressive. And 89, yeah, and 92% of the members own their own home, and I think it's 54% they have investment properties in real estate. So we know that gives us a really good overview of what Nahrep is really doing and how impacting those people that in contact with Nahrep.
If someone comes to you and asks, are those are only for Hispanic community, what would you say?
Do you sell houses just for Hispanic?
Yeah, if somebody
I was
asks.
gonna say that. Do you sell houses just for Hispanics?
I say for anyone.
So this information, we're here we're branded as the Hispanic community, but it's for everyone. This is to help lift the community. I think now the Hispanic community is like one of the most race that blends with the every other. There's no a separation. So I think that we're touching lives on the Hispanic community, the Asian community, the African American community, everywhere. This is information we give to the community, to the population.
Thank you. To wrap this up, which Nahrep discipline do you feel is the most mindful, and which one is your favorite?
Yeah, a lot of people say which one is the most important. Well, it's hard to say which is the most important because all of them together is important. Because sometimes if you work one or two, one aligns with complements the other. But I think depends what position you are in your life. I think that you need to develop that one principle more than the others. And I think now it's the number 3, live below your means and be prepared for the next recession, because our economy is a cycle. And I think that we're going through that cycle right now. And when it comes times of uncertainty, I think the best thing that we can do is prepare ourselves for the worst and not bet for the, for the rich side, I'd say. But I think that right now it's focusing on number 3. And along with number 3 comes number 4, which is minimizing debt. So you're minimizing debt, you are working that number 3, which is living below your means. Because when you have a lot of debt, they keep coming, and you don't have income, then it just keep accumulating. So yeah, those would be the ones that I'm putting more focus to right now.
I think all create with one another. But thank you so much for being here today. Thank you so much for attending this event, and blessings.
Oh, thank you. Thank you, everyone.
Thank you, AZ. Thank you, Marissa. Now we're going to move on to the next topic, which is economics of real estate. So we welcome on stage VP Bingham with Nahrep, or Dallas Nahrep President, Russell Berry, Great Western Realty Broker, and Daniel Hunt, Real Estate Agent.
get to join the stage with two people I respect very much. Russell, we've had you on a number of times. You were once the president of METROTEX. And Daniel, I met you out and about. You do luxury home sales. And so we want to just talk about the state of real estate in the United States, but most importantly here in the DFW Metroplex. But to get us started, we're just going to touch on something. I know you can't go too deep. I know you're well informed. Mr. Barry, what's going on with the NAR? Where do we stand on it?
Yeah, so first of all, I have to say thank you guys for having me back. I guess I wasn't so bad the last time. But I also have to say, the funny thing is, I just got back from Mexico on Saturday. And it's interesting because I do get to travel around a lot, not only in the state of Texas, but outside in the United States and outside the United States. And, for me, that's all about learning. It's all about figuring out what's going on. And I know we're going to talk about the state of real estate in the country. But I know you want me to touch on this with NAR real quick. And I'll tell you, for the most part, many things have settled. And I use the word settle because I think everybody knows about the settlement. We are moved past that. We've been working in this current environment since August, right? And if people don't know how to make a commission or a compensation through their contract or through the 2402, it's probably about time you figure that out, right? I was talking to another broker that I'm real close with, of a very large company here, and she said to me, we're going to give you guys until August, and if you haven't got it by then, too bad. It's over. You better have it. You better know what you're talking about. And I will say this, I still get calls every day about what goes in paragraph 12, or how I get compensated on this and everything. I get it. We're still getting used to it, but man, you better figure out what's going on. But one of the other things that Ben and I were talking about is there is another lawsuit that may affect the way you do business. And it was filed right here in Texas, in the Wichita Falls area. And that has to do with the, what they're calling the monopoly of joining the association. So you guys all know that, in order for you, and this is not true, but let's just say this, the lawsuit is based on the fact that many people think you have to join an association, both national, state, and local, to get MLS access. And that lawsuit basically named Texas Realtors, named a couple of local associations, and of course, the National Association of Realtors. That's going through the court system right now. Like I said, can't say too terribly much about it, because just so you guys will know, one of my jobs, and I was just elected to represent you at the National Association of Realtors as the Vice President for Texas and Louisiana. So I'll be sitting on the executive committee, basically dealing with these issues that you guys are going to be talking about. And I will say this, one of the issues we are going to be talking about is the settlement amounts. You guys know that $200 billion were paid this year, and I think $50 million the next year, and another $80 million the year after that. They're going to be talking about raising their dues. So we will be having to talk about what value these associations, local, state, and national, bring to the table. But that's kind of where I'm going to leave that. Just be aware there is another lawsuit going on. There may be some more money. There may be changes in the way you do business. I can tell you already there's going to be contract changes coming out in January, because what happens after every legislative session, there are contract changes. We are doing away with sub-agency in the state of Texas. Maybe you don't even know what that is, and that's perfectly fine. But these things change, and the real estate business changes all the time.
All right. So Nahrep is a real estate professional organization. And we have them on stage because we see the changes. And they are very adept at handling what's going on. So Daniel, to you, with all the changes that you've seen, how would you help your colleagues manage their way through what's going on, and how do you continue to be successful with all the changes?
These changes, in my opinion, are a blessing. Majority of realtors that I have dealt with, a lot of them are having a hard time dealing with these changes. In my opinion, not much change, it's just the way we explain it. To kind of piggyback on what Vanessa has said, it's really about education. If you can do education that makes a little bit of entertainment, which I like to call entertainment, edutainment, that makes your business grow a whole lot faster. Okay, but it's just really the way we explain it. Use the correct forms. Once I kind of knew what forms to present when my buyers are looking to purchase a home, I just explained to them, hey, listen, I'm going to do all I can to get my commission from the seller. However, if that's not possible, I can explain to them that you may be required to pay my commission. Okay? I think a lot of buyers do not know how to present, or buyer agents know how to present their value. Right? They know how to present their value and to come have a sense of authority. Okay? I also believe in building my brand and being my brand, having a strong brand, whether it be social media, be YouTube. They see that. You're always having a strong CRM system, giving continued education, right? They can see your value. I'm big on people being able to see your value. Like, for instance, getting in front of a large group of individuals here on a consistent basis, scaling, and giving as much education to many individuals as possible. People see that, they see you as a person of value, and they trust what you have to say. I had the pleasure of speaking on CNBC about maybe a year and a half ago, and they were under the impression that here in Texas or here in the Dallas area, this was also a seller's market. No, it is not. That goes back to giving it proper education, right? People look at Google, they see the news, and they think that's law. No, we're out here. We are out here. I can confidently say, this is a buyer's market. Back to also letting your buyer know of the incentives that they can receive. I'm getting crazy incentives now. People are buying down interest rates like never before. People are giving money to buyers for closing costs. So it's really just come down to really just educating, knowing your business, and coming from just a sense of having that authority.
So here's a question for you. What are the key economic drivers specific to the DFW region that are influencing its real estate market?
Yeah, so I love this guy, first of all. We've never met. But you basically said everything I'm going to say, so I can just get off the stage right now. Value is a big thing. But specific to the DFW market, you really need to be the expert. You need to know your market. You need to know what you're doing. You need to be able to provide value. You need to be able to show that value and how you make that compensation. Because now the conversation has turned about, from what, value am I getting from this house and the appreciation in this neighborhood and where I want to live, to what are you going to do for me? What's in it for me? What am I paying this amount of money to you for? So you better be able to talk about that. But in the DFW market, I'll say this. We have gone from being on everybody's list as the highest, the best market, the best place to do business, to being number 15 as the worst market in the United States. Figure that out. That happened because we were one of the best markets, because we had such big appreciation, because we had such big jumps in home sales. That was not sustainable. We all knew it wasn't sustainable. So if you thought, getting your driver's your real estate license, just to do a couple of deals in the past 5 years, maybe was going to be sustainable, it probably isn't. So my thing is, go back to basics. You better figure out how to work that sphere, like you said, to be able to get those clients, to be able to keep those clients, to be able to work with their friends and family, to know what you're doing, because it's not just going to come to you any longer. One of the other things I will say about the DFW market, and this is Texas as a whole, and probably a lot of other places, because I will say many of the cities that are on that list are in Florida also. And funny thing is, just so you guys will know a little bit about me, I'm a broker for a company that has agents in all over Texas, Florida, and Arkansas. So I kind of get a little bit of everything there. But one of the big factors here about affordability is the appreciation that we've experienced. It was double digits for a few years, right? So you could go in and have built-in equity the minute you purchased a house, which also gave people the calmness of being able to pay over appraised value. We did that, right? We know what we're talking about here. But also one of the big things that's affecting us is insurance. You got those other costs that go along with purchasing a property, right? You have taxes and insurance. They're working on taxes. Taxes are already high. Taxes are always going to be high. Even if they're $1, they're too high, right? I mean, that's what we're saying. Taxes are high. But insurance here in the state of Texas is really what's driving some of those prices. If you lower the taxes, but you raise the insurance, you really have seen no gain, right? And that's what I think a lot of people have done. So those are some of the things. And as far as inventory, we're catching up, folks. If you haven't seen that your monthly inventory is going up, you're probably not out there working, right? We were doing 3 days, 5 days, 10 days on the market, right? Now we're up to 2 months. We're 2.5 months, almost 3 months. And what do they say? A balanced market is about 6 months. 6 months of inventory, folks. If I have an agent that calls me one more time and says, what do I do to get my house sold? How long has it been on the market? 2 weeks. Well, guess what? It's not going to sell in 2 weeks. That's not what we do unless you have an incredibly priced house. So those are some of the things that I'm seeing that's going on in the market right now.
100%. Want to add to that?
No, 100%. You killed it. You definitely killed it. How many realtors do we have in the building? We have some walls here too. Raise your hand. How many realtors? Okay, and I'm assuming everyone else is walls. So I'm gonna give you a quick tip on how you can, with consistent education, putting yourself out there, how you will be able to get clients. So everybody has a phone, right? Put your phones out real quick, so I don't know how much time we got. Everybody has a phone, okay? Whoever has an Instagram account, go to Instagram and put in It's Dan Can. Follow me on Instagram. It's Dan Can. ITSDANCAN. It's Dan Can. ITSDANCAN. Okay? All right, follow me. Subscribe. All right? Raise your phones up if you've actually followed me, subscribe. Raise your phone up, raise your phone up, raise your phone up. Okay, all right. What I just do, I got into in front of a large group of people. That can be farming area, right? That can be social media, that can be YouTube, because of YouTube. And what did I do? I gave a little bit of information, which I'm constantly giving information, and I asked you to do something. But I realized, okay, what most people want to be directed. They want to accomplish a goal, they want to purchase a home, they want to sell a home, they want to be directed, right? You put yourself in a position of authority, right? And you politely, just consistently get into a rhythm, right? Get into a rhythm of just asking. A lot of us don't have business because we don't ask enough. How many of us have kids here? Raise your hand. Kids. We have kids, okay. How many of us have grandkids, all right. How many times a kid asks you one time to do something? No, they come back 4, 5, 6, 7, 8, 9, 10, 11 times to do something when they want something, right? That's what advertising is. They have to see you 10, 12, 13 times. Remember, all my clients, everyone follows me on YouTube, on Instagram, on Facebook, on TikTok. They're getting CRM systems, right? What am I doing? I'm constantly asking. I'm constantly putting myself in front of them, right? You constantly do that, you will get business.
So I have a question. I'm leaving script for a second. Yeah. So clearly, there is no shortage of confidence between these two people on the stage. All right. A lot of times I'm hearing seasoned real estate agents, new real estate agents, not wanting to ask for the common 3% that they would normally get. How do you, since confidence exudes off of you all, but what if somebody is more meek and mild and they can't see it coming, but they still want to inform their people why they're beneficial? Well, how would you answer that question?
You have to get comfortable presenting your value. See, if you second guess yourself, the person you're talking to is going to second guess you, right? So you have to get to a point of, what I like to tell people on my team is, we have a process where we have the disc, go through the whole disc where I understand what their personality is. How can we start with the end in mind? It's a paper, you're this amazing realtor, you have everything you want, you're on the level that you want to be in, right? What does that look like? Okay, how do we get that person? Because usually someone say, okay, I want to make, $500,000, $600,000 a year, or whatever they say. Okay, all right. Usually it's double that. That's what you really want, but you're afraid to say it. Okay? So anyway, we have to go, how do we start with the end in mind? Bring that person to the present as much as possible, right? And then consistently exercise that. We have a number of different things we do. I help a lot of people on my team different exercises to stay in that mind frame, to stay in that feeling, right? Because a lot of right where we're at right now, you have to be confident. There's a lot of noise going on. Google, the news, I mean, I've been on the news twice, right? And I'm sitting here telling them, like, that ain't it. Like, what you gotta understand, that may be it for New York or New Jersey, but that's not here in Texas, right? So really knowing your market, being confident, being able to project that confidence to your client in this market right now is very important, or else you will get ran over. Russell?
Yeah, and I'll add to this. Not everybody needs to be like us, the flashy, the out there at the top, the people who do well on stage or whatever, but you do have to be an expert. Daniel touched on this a little bit here, but you can't expect to just walk into a listing appointment and get it, right? You have to do your homework. You have to go back and know that market. You have to know that neighborhood. You have to know that client. You have to understand what makes that client tick. And I will say this for everybody in the room, you're doing it right now. You're doing the right thing. You're in the building. You're learning from people who have done this before. You're actually out there doing a lot more than what most agents do. Most agents just show up and say, they're a friend. They're going to give it to me anyway. But if that friend gets either one of us in front of them, they're probably not going to, because at the end of the day, sorry guys, but whatever. But at the end of the day, they're going to look for somebody who does the best job for them, who understands the market, and who's going to be the expert in that field. So I will say, do your homework. Come to things like this. Take education courses. Get designations. Understand the market and be present. I always, I get in trouble for this, but it's very difficult to be a part-time agent. Because that means you're good at maybe something, but maybe not good at everything. And your clients are expecting you to be good at everything. One of the other things I will say too, because I know we have a lot of mortgage professionals in the room, the company that I am the broker for, we actually own a mortgage company too, so don't anybody come to me for your business. We already did it. But the same thing goes for mortgage professionals. You need to know every single product that Fannie Mae offers. You need to know down payment assistance. You need to know I-10 loans. You need to know everything that's thrown at you. Because the minute that you kind of start waffling or say, oh, this is my first one, that's when you lose the confidence of your clients. So look around you guys. These are the people that you need to be doing business with. These are the people that you need to partner with, that you need to make sure that you're giving them loans, loan officers, giving them deals, because they're in this room and they're learning from every person.
Just to piggyback off what he said, what helps a lot, if you don't have a strong brand, yes, you're gonna have to really know your stuff. You'll be up against a number of realtors, okay? You'll be up against maybe 2, 3, most people when they're looking to sell their home, on average, 2 or 3 realtors is what you may be in competition with, okay? Once I started taking me being my brand seriously, very seriously, the competition is zero. People have already decided to use me as their agent. I never compete for a listing. I have 8 on the market now. I have 2 more listing appointments next week, and I know I'm getting them. Why? Because they've seen me on YouTube so many times. They've seen me on Instagram so many times. They're happy that I'm there, right? So unless you want to compete, it's going to be a lot of competition out there right now, of course, with these listings. But that's why I just want to kind of piggyback off. You're really going to have to know yourself, because they're going to be kind of, comparing who's the best. If you kind of want to alleviate that, start putting your brand right now. It's going to become more and more helpful as I see the market going.
All right, now let's slide back into where we were. Your expectations for the DFW real estate and what potential challenges or opportunities are on the horizon.
Yeah, so I kind of touched on this a little bit, but we're changing a little bit, right? I love being here in May. Because if you guys listen to all the economists and the people that were doing their forecast in January and February, they're wrong. They were absolutely wrong, right? Everybody was saying we're going to have the presidential bump, after we have the election, everything will cool down and interest rates will go down, and, all of these things are going to happen. Well, it happened a little bit. And we had a pretty decent first quarter, right? But that's kind of changing a little bit. We're seeing houses sit on the market a little bit longer. We're seeing buyers saying, maybe the interest rates aren't going down, so maybe I should wait longer. We've been telling them to wait, and interest rates are kind of staying the same. But the biggest thing that I see what's happening here in the DFW market is the national economy is playing havoc on what we're doing here, right? We think we're usually pretty insulated in DFW. But, with things like tariff and immigration, which I know you guys are going to talk about a little bit later and everything, those things are having an effect on this market right now. People are confused. They don't know what to do. When people are uncertain about the market, it affects the housing market, the real estate market. God forbid you're going to fire the Fed chief, the guy who is trying to get the economy back on the right track. And people are starting to think, well, if that's going to happen, maybe I should wait. Maybe interest rates are going to go down. Maybe they're going to go up. Maybe I don't know. But uncertainty is probably the biggest thing that's happening in the DFW market right now. We have a lot of inventory, and inventory is not just existing homes. We have a lot of builders out there that are building the heck out of homes, and that's affecting our inventory. Which, for years we were saying, we don't have enough homes, we don't have enough, inventory. We need those builders to build. Well, guess what they did? And who's winning right now in the housing sales market? The builders are. Builders are winning because they control the inventory, they control the interest rates, because they're doing these automatic buy downs that they have, they're out there with their brand too. They're out there with their brand showing what they can do for an average homeowner. So builders are affecting us a lot. The uncertainty is affecting us a lot, and the inventory is affecting.
All righty, y'all. I'm gonna cut us a little short because we need to play catch up. So just final thoughts, open. Any advice, anything you want to tell the audience that you feel is important right now?
Yeah, I guess just in short, you're the expert, so act as such. People are hearing so much noise from their neighbors, from their friends, from the news, from Google. People a lot of times think that because they purchased one house, they're an expert. They're not, no, or their mother and father has purchased 2-3 homes, they're an expert. No, they're not. So I'm really just coming from a sense of, you know what you're talking about, being confident, staying up to what's going on, coming to events like this, network with individuals, and I always come from a place where I don't know it all. I don't know it all. I'm always trying to learn. I'm always a student. But when I, of course, sit in front of that client, I almost come across as I know it all, right? You got to come really confident as much as possible. And so with that type of mentality, attitude, you should do great within this market.
Final words, Russell?
Yeah, I like that because I feel like I do know it all. Sadly enough, and this is where I was going to start with this conversation, is one of the reasons I feel like I'm an expert is because I'm old. I will tell you right now, you've been in this business long enough, you've seen the downturn of the subprime crisis or people yelling recession or whatever, you kind of been around. But at the end of the day, people are still going to get married, have children, upsize, downsize, die, all of those kind of things, and real estate will still be good. So people always ask me, when's the best time to buy or sell real estate? And what is the answer? Now, absolutely now. I'm so glad that you guys said that because we don't know what's going to happen in a month. We don't know what's going to happen in a year. We've got the uncertainty of what's happening, in the national scale, but at the end of the day, this is the best time to sell real estate. So, like Daniel was saying, what is your value? What can you offer them? What do they need to know that you know that they don't know, right? They can go online. They can see an automated valuation module. But do they know what's happening in that market? Do they know the trends in that market? Do they understand that maybe if they buy a new home right now, they may have to stay in it for 5 or 7 or 10 years before they can move? All of those things are happening, in this market. So I will say, understand your market, understand what people expect from you, understand how you make money, because a lot of people think this is just a hobby, right? It's a hobby. I can just stick a sign in the yard and sooner or later it's going to sell. I'll just keep beating them down for price reductions, and then that's the easiest way to lose a client from then on. Like my realtor didn't price it correctly, or my realtor, even worse, my realtor asked me what I would like to get for the property. What are you saying? Well, you're the expert. You go ahead and tell me. But at the end of the day, we're all professionals. We're in this together. I love that we have a big group of people here because we've always said that we are friendly competitors. This is how you learn. You learn from people like this. You learn from people like Daniel who are willing to give up the secrets. You know, and that's awesome because every single one of us can go out there and do that.
Thank you very much, Russell and Daniel. I appreciate your invitation. Good morning, everybody. How are we doing? So I'm super excited to be here. So as you know, I'm your 2024 past president. Super excited to be handed over to Ben because now I get to wake up a little bit more relaxed. So super excited. So I want to invite my next set of panelists up here. So I have Lisa Amayev, the Senior Escrow Officer. Oh, sorry, scratch. How are you, Lisa? I know you're doing that while I got your mitt. Lisette Moreno, Attorney at Law. I have Juan Carlos Cerda, Texas State Director for the ABEC, and Victor de la Flor, Attorney at Law for Market Law Firm. Sure. That handheld one, so Victor has a little help. Awesome. So I'm really excited to have this panel today because, as we know, deportation can be a complex and overwhelming process, often surrounded by confusion and misinformation. And on today's panel, we'll be debunking common myths about personal and property rights in the event of deportation and equipping all of you with the knowledge so your clients understand their rights and protect their assets. So I want to start off by introductions. I want you to introduce yourself and who you are and what you do. So you want to start here?
Hello, happy Fiesta Day, right? Cinco De Mayo. So I'm Lisa Almaguer. I am 2020 and 2021 Nahrep Dallas president, or I was, and now I serve on the regional corporate board of governors for Nahrep, Mountain Region, sorry. And then I'm also an escrow officer with Secure Title in Texas.
Good morning. Thank you so much to Nahrep for the opportunity to speak. My name is Juan Carlos Cerda, and I'm the Texas State Director for the American Business Immigration Coalition, or ABEC. And we're a group of more than 1,700 CEOs who advocate for common sense immigration solutions. And we're led by some of the most prominent business leaders in the nation, like the owner of Live by Lowe's here in Arlington, Creative Barrel Furniture Stores, and Hunt Companies worldwide.
Hi, I'm Lisette Moreno, and I'm with Schultz & Keller. I do estate planning, so that means wills and trusts, and they also are with independence title. That's a little bit of what I do.
Hi, good morning, everybody. My name is Victor de la Flor. I'm originally from Peru. I'm an attorney in Peru as well as here in New York, Florida, and Texas. I run my own law firm, Kibaki Law Firm, with offices in Dallas and Miami. We specialize in immigration, business, and real estate. Thank you for having us.
So super excited to have this great, well-rounded panel. As you know, we have experts here for their subject matter. So I want to start off by addressing the biggest core fear. What is the biggest myth you've encountered regarding what happens to personal property rights if they are deported from the U.S.?
Me? Well, I think the biggest myth and the fear factor, right, is that people think that the government will seize their property, their assets, in the case that they're deported. So that's one of the biggest myths.
Any other myths?
Yes, I agree with you. So here in the States, there is the right to buy property and to hold property. Even foreign nationals, regardless of the immigration status that they have, can legally buy property here in the U.S. and remain the property, keep the property, even though they can be deported or removed after removal process. So there is no way just for the deportation process to be removed from the property.
And is property automatically confiscated or forfeited if the owner is deported? And what actually happens legally to property owned by someone who is deported?
Well, I'm gonna give you the floor because it goes with power of attorneys.
also, you know, if someone is deported or anything like that, you still are the owner of that property. And so what I usually recommend to clients kind of fearing that are to kind of have a power of attorney in place, a limited power of attorney, to allow them to appoint someone to sell their property just in case. And that just gives them the authority to do whatever they need to do here and go ahead and transfer those assets accordingly.
And just to add a little bit more about it, currently foreign nationals, especially documented foreign nationals, are using other estate planning tools like trusts. So they can in a contract basically they can say who can be the beneficiary of the trust, and in the event of death or if they are not here for any reason, so the beneficiary or any other person, well, the trustee can manage the property.
So we mentioned power of attorneys. Who can be appointed with power of attorneys? And does the appointed person need specific qualification or status?
I usually recommend someone who's a citizen here, just to avoid any other issues. And I always say, just pick someone you trust. Please, please, please don't just appoint anybody, because some people will appoint their friend from who knows where. And like, okay, but can you make sure that they're going to actually do what you want them to do and keep the money where it needs to go? Sometimes you want the realtors to be their powers of attorney. I don't really recommend that just because it is self-interested. But I mean, I can only guide my clients so well.
What's one of the risks of using power of attorneys, and can you use a power of attorney in an LLC?
That's kind of different because the LLC as a new entity, as a different entity from the individual, LLCs act through representatives. So is the LLC the one who gives the power to these individuals to act on behalf of the LLC, but it's not technically a power of attorney, but it's just how it goes through the LLC Act or corporate acts.
To add to that, a lot of my clients will think, they'll think that, oh, well, I'm going to appoint so-and-so to be my power of attorney, and, they're a single member LLC. So then, of course, remember, guys, I'm not an attorney, but I am a experienced escrow officer. So when I speak to you, I'm speaking from the point of view from the title underwriting requirements. So I think it's very important, that we all collab, and I know that's something that we'll talk about later as far as the collaboration, because what they may prepare may not be acceptable for our title underwriters. So that's what's so important. But on the LLC factor, if they're a single member LLC, they can't, use a power of attorney for that. They need to maybe amend that LLC, right? That's what they're coming to you all, so that they can add someone else to that LLC, so that then they can sign a corporate resolution that designates that party to sign. One of the things as well, when you're talking about power of attorneys, is that those power of attorneys for a real estate transaction need to be property specific. So when I say property specific, it can't just say for the property, it has to say for the sale of the property. It can't say 123 Happy Street. It has to say 123 Happy Street, Block A, Lot 11 of whatever subdivision, Dallas County. So it has to have that legal description. Whether you're buying or selling, it has to have that, because that power of attorney needs to be registered. That has to be recorded in real property records prior to any documents that they're signing that are being recorded in real property records. And give me the mic, I'll be here all day. But one of the things as well is not only the property specific, but sometimes you have that fear when we're talking about appointing someone that you trust. So again, I'm not a real estate attorney, but I suggest that they appoint someone they trust, but don't give it to them, right? You hang on to it. You hang on to it to the moment until you may need it, right? At that point, if you're deported, if you've been deported, you're still going to have an access to a telephone. So, eventually. So then you say, hey, brother, beloved brother, right? I left, remember that power of attorney we talked about? Well, it's in this drawer in the house, and I need you to use that. Because we can't accept a copy of a power of attorney. We need the original Also, for title insurance purposes, those power of attorneys need to be ratified at closing. So what does that mean? That means that we have to communicate with that person, and we have to communicate with them. We have to make sure that they're still living and that they haven't revoked that power of attorney. Like Seth was saying, what if, don't just pick a friend, right? Someone, un padre that you met, and y'all aren't friends anymore, y'all had a falling out, because then you could have revoked that power of attorney. You were talking about funds, right? So with funds, a lot of people may have the fear that, like I said, we have the fear factor that, but I don't trust them because then they're gonna receive all my money. No, we can only disperse those funds to the person's name on title.
So I have another question, because power of attorney affects, you have to designate it, if I'm not mistaken, correct? To the property, to what do I grant you access to do. But in this case, what also happens to the children sometimes? So what makes, for like mixed status families, what legal documents are essential in Texas to designate short-term or long-term guardianship for children in case the person?
So I recommend having an authorization for your children to allow an adult caregiver to kind of care for them while they're here. And also maybe even a consent to travel. So that allows someone to make sure they get to where they need to go if they do need to go abroad. And so we also do guardians, the declaration of guardians, so if something has happened to you on, death or anything like that, we have something that says who you would want to care for your children and get appointed as guardian for their person and their estate, because you can't just leave them with anybody. You have to go through the court system to get all of that approved.
And I'm not an attorney, but I help a lot with the Hispanic Bar Association, so I also notarize those documents. So not only with the real estate transaction or the power of attorney, the person who is designated as the signer, right, doesn't need to sign that power of attorney, but in the guardianship for the family, both parties need to sign in front of the notary.
I do recommend both parents, doing one for each.
I mean the person that's accepting, because your sister may say, I don't know what you mean.
Yes, I do recommend that they are aware that please have an open conversation with these individuals that you're appointing, because they can resign if that comes out to it. So yes, we do kind of take that extra precaution having other individuals, your appointees as well.
Because right now we hear a lot of negative things going on. We hear about all the ICE raids. We hear about this happening, these laws are potentially passing. But Juan Carlos, I know we were speaking earlier that you said there's still a lot of good that's happening. And you mentioned in your introduction you're advocating for common sense also. What are some things that we could look forward to so that way we're prepared for everything?
Yeah, I feel like everybody on this panel is talking about me. And the reason why I say that is because I am an immigrant myself. I came to this country when I was 3 years old from San Luis Potosi, Mexico, with my parents because we were looking for a better future here in the United States. And my dad is an electrician, my mom is a factory worker, and they raised 3 siblings in a house that they were able to get because a real estate agent helped them despite their immigration status. And now they're just 7 years away from being able to pay off their house. And they were undocumented for 27 years until my youngest brother, who is a US citizen, was able to get them a green card. And it's thanks to that upbringing that I was able to have a great upbringing, being able to focus on school. I was undocumented for 20 years until I was able to get DACA. And I couldn't legally work or drive or be protected from deportation until I was able to get DACA. This program allowed me to get access to a work permit and start a career as a school teacher. I was able to graduate from Grand Prairie High School just down the street and attend and graduate from Yale University in New Haven, Connecticut. So an example of some positive things that immigrants are able to do. And as far as, the myth that immigrants are victims, that's absolutely not true. My family and I are living the American dream, and we're enormously contributing to the Texas economy because immigrants in this state contribute over $173 billion to this state. 20% of immigrants in this state own a home. You're talking about 1.4 million people who have a house. And that translates into $493 billion to the housing wealth that this state has. So it's thanks to this that Texas, if it were its own country, we would be the 8th largest in the world, and that's because of immigrants.
8th largest economy in the world. So, Juan, you mentioned, you were an immigrant and you came involved. So I want to throw this over to Victor. Can you explain some of the different visas that these immigrants might be able to use to potentially purchase property in the United States?
Yes, the good thing is that they don't need a visa to buy a property here. Again, there is no requirement in the federal law or restriction, basically, on property ownership based on immigration status. So everybody can buy a property here in the States. But having said that, it depends on the visa that you're on, how you can manage that property. For instance, one of the most popular visas for the US is the tourist visa, the B2 visa. People with that kind of visa can buy property here, but they cannot reside here legally just for the limited period of stay that they are authorized when they enter the US. So there might be an issue there, and there might be also a misconception because owning a property doesn't mean that you will have a path to residency, to legal permanent residency or citizenship. So these persons under the B2 visa, the tourist visa, great, they can buy a property, but that is not the path for legal permanent residency. Then you can have students, F1 visa holders. They also can buy property, but they might have, they might have some troubles with securing conventional financing because usually students come with a very tight budget. So if they don't buy cash, it's kind of complicated for them to secure financing. Then you have the workers, so all in H1B visas, L1s, O1s, etc. So they work here, they make money. Sometimes they have money from abroad. So maybe the mortgage process might be kind of complex for them. But they are good candidates to buy property finance through a mortgage. Then we have investors, E2 visas, EB5 visas. From my point of view, those are the most sophisticated ones. They know the market. They actually come here to the US to invest substantial amount of money to run US businesses. So they usually buy properties and run the businesses. And finally, for the foreign nationals that already hold a green card, they already are legal permanent residents here in the US. So for them, there is not much issue because they have similar rights to a US citizen. But yeah, so that's some sort of a summary of the visas. So.
Nice. Did y'all catch all those visas? You're experts on it now?
There are more visas, by the way, but these are the most common ones.
And that's good to know because, we're real estate experts and we have to remember real estate experts. We're not legal experts. So at what point do we need to push our clients that say, hey, they might need some legal help? At what point, or how do we even prepare for that?
I would say like the last persons that were here, they said know your client. So I think that it's very important for the real estate agents to know your client so they can have a group of professionals that can help them in their specific case. I mean, from my point of view, all cases in immigration at least are different. So they need not only immigration attorneys, but real estate attorneys, closing agents, escrow agents, maybe attorneys that manage the POAs of estate planning, so they can get the most benefit of the transaction they're going to make for the future. So I think that they need this like a total view of the transaction.
I actually think you need an estate planning attorney the minute anything big happens, including buying a house, just because you want to make sure that that asset is secured and you know what's going to happen to it, whether you're alive or pass. And no one thinks about it until it's too late and then we can't do anything about it. So I think a little earlier in the transaction, and I think that's everybody.
That's huge. And then, so Juan, well, actually, all of y'all have open question panel. What is some changes that we're seeing right now in laws or immigration or real estate that you're seeing that we should probably look at that might affect us?
I gotta say that, I mean, it seems that the first 100 days of the current administration have been hectic. It has been, but the immigration laws, the Immigration and Nationality Act by itself hasn't changed. So the laws are the same, the policy's changed, but now the client, I think, is acting like like a response from that policy change. But again, I think that now that we need to focus on the state restrictions. For instance, I'm an attorney in Florida too. Florida has enacted recently laws with restriction for certain nationals, especially Chinese, Iranian, very Asian directed law to buy properties near, for instance, military facilities. So based on security, national security concerns. So maybe Texas, I don't know, but maybe they follow the example of Florida, so they can do that. And now we also know about the huge settlement executed by the National Association of Realtors. So that is a small but big change with the buyers. So the buyers now need to sign this representation agreement outlining the agent's compensation even before showing properties. So for me, that's the big changes right now.
But there are some positive policy changes coming too. I actually met Marita Fulan and Benjamin Campos at the Nahrep Policy Conference in Washington, and we were also having our Secure America's Workforce Lobby Day, where we met with 121 members of Congress and Trump administration officials. People like our U.S. Senators from Texas, John Cornyn and Ted Cruz, Senate Majority Leader John Thune, Speaker Mike Johnson, and the Chief of Staff for Secretary of Agriculture, Brooke Rollins. And we presented to them a poll that showed that 85% of general election voters, 90% of Latino voters, and even surprisingly, 71% of Republican primary voters support a path to legal status for long-time tax-paying and law-abiding residents. And this was successful because some of the senators that we met with actually took these findings and presented it to our president, showing these results. And the president actually has said several times since then that he wants to provide some kind of path to legal status for people who work on farms and hotels and other industries that really need workers. And why this is important to real estate is because 38% of construction workers are immigrants. And many of them are also real estate professionals. My real estate agent who helped me buy a house in Fort Worth with me and my wife, who's also a DACA recipient, that real estate agent is a DACA recipient herself. So she also grew up here, like any other American, but she just doesn't have that permanent legal green card. And two other policies that I think could have potentially impacted the real estate industry are happening right now in Texas. One is potentially taking away a policy called the Texas Dream Act, which currently allows all Texas high school graduates who have lived here at least 3 years to pay the state tuition rate. And why this would be bad is because if you prevent people from going to college, especially like dreamers who grew up here, then they're not going to go into the construction management careers. They're not going to go into real estate careers. And that would be very damaging to the economy. The Texas economy would lose $461 million per year. And so the positive thing is that we met with the Speaker of the House. We testified on this bill twice in the past 2 weeks. But we need continued help to ensure that this policy remains in place until the legislative session ends in June. And then the last thing I'll mention is E-Verify. There's several proposals right now that would mandate E-Verify for all private employers. Why that's a problem is we have construction delayed. We have, a shortage of 320,000 units here in Texas. So if you make it harder for construction companies to keep their legal workers, because E-Verify is prone to errors, and if a worker is misidentified as being undocumented, that's just going to delay a construction project, and it's going to continue making the housing shortage worse.
Very good, very good. So I just want one quick sentence. to know what is the one piece of action advice for real estate professionals, everybody here that's listening, to better serve their clients and navigate these fears and realities. Yeah, give me one liner.
No, I think for me, I believe it's important, again, to collaborate, right? For us to all collaborate together, what they say, collaboration over competition, right? But also communicate with your title companies, with, your real estate, the people, the connections, right? When they say that, 1 million Hispanic Americans will turn 18 every year, and that's going to continue to happen for the next 100 years. So, they say, ponte las pilas. Yeah.
Know your immigrant clients' stories, because that is the best way that you can advocate for them, both in Washington and in Austin. Know their stories, tell their stories, and uplift the positive contributions that they make on this great country.
Ask questions. Please don't be scared to ask questions. We're here to help, and other professionals are out there to help. So please utilize your resources so you can present the best for your clients as well.
I would say the same as Juan Carlos, know your client and represent them to the best of your abilities. Thank you.
Well, thank you so much for this wonderful panel. I hope you learned a lot. And if you want more information, if you really want, contact me. Thank you. So next up, I want to bring up phenomenal margin reading.
Thank you. We're ready for our next topic, bridging the gap. Can we welcome Melissa Castro? She is with part of the board at Nahrep, parliamentarian, and she will be our moderator. Welcome on stage, Jose Lopez, Eco-Agent Realty Broker, Victor Burgos, appraiser, Pilar Johnson, mortgage loan officer, Laura Suarez, real estate agent.
Hello, everybody. Thank you for staying with us. Very much appreciated.
Perfect, y'all can still hear me. So I apologize, we are very short on time, but I do think it's important that we do touch on the topic of bridging the gap. The panelists that we have asked to be here with us are experts within their field, and they are heavily active within the community. I think it's important not only that we talk about advocacy, but that we actually go and do it. So if you could please quickly introduce yourselves.
Yes, Laura Suarez, real estate agent.
Jose Lopez, Eco-Agent Realty for 25 years.
Pilar Johnson, lender with First Horizon.
Hello. Victor Burgos, licensed broker, inspector, appraiser, insurance agent, adjuster, notary.
Everything.
Love that. We all wear multiple hats in real estate. I think we can agree to that. So one thing that we've heard today, and it's been a common theme with regardless of who's been on the panel, is that education is a huge part of the gap within our underserved communities. In your respective fields, do you feel that there is anything else currently hindering our minority communities?
Yeah, I'll take it. Outside of education, of course, normal, the debt to income ratios, I think also lack of vision. I think when you're speaking with your clients, you have to help shift the mindset. We have a lot of millennial buyers who like the apartment living because it comes with so many benefits. But if we shift that mindset to, hey, still go purchase a home and then use it as an investment property and start creating some passive income, because as we know, real estate is the #1 asset and the best way to create generational wealth. And then also encouraging your buyers to purchase in those transitional areas. Right now, it may not look the best, but in 3 to 5 years, the landscape is going to completely change, and the development that they're doing in those areas is gonna skyrocket your property value. So just having an open mindset.
Anybody else?
Misinformation. Misinformation and fear for the process. About a month ago, you guys heard about on the news, FHA loans, they're not giving any documented and they start giving loans. That was wrong. It was broadcast through our TV channels, everybody, and we all know as a realtors that was a false information. We concentrate, do homework seminars, and that's what we teach. We teach them, and try to just talk to the clients and say, that was wrong information and it was all over the news.
For me, I'm gonna say one of the things that hinders our community is access and trust. So there's not a lot of access to information. A lot of our families in their household, they don't have a family attorney. They don't have their personal banker. They don't have anyone giving them this advice and opinion professionally so that they know how to make decisions. They talk amongst each other and they kind of say, well, let's figure this out together and make decisions based on their personal, information. And so I think that access and trust is very important. We need more representation. We need to have people like us to represent our community and represent them well.
I think it's a big part of it is financial. You've heard this panel, previous panels. Financial ignorance is huge in our communities, and I think we need to be a big part of helping contribute to how money works.
I think those are all very valid points. One way to tie it together is, what are some of your either daily routines or resources that you utilize to ensure not only are you educated in your respective fields, but that you can communicate that to your communities?
I'll take that. There's an old saying, if you want to hide knowledge, put it in a book. It's very simple. Read a book a week, read a book a month, and you will be amazed. And your financial intelligence will increase, and your knowledge base of your specific profession will increase, and you're able to pass that on just by simply recommending a book.
Similar as we heard one of the ladies say earlier, collaboration over competition. Attend events like this, and there's also other organizations for other demographics, such as the National Association of African American Real Estate Brokers. We've also got ARIA, which is an Asian American. So just making sure that you are knowledgeable about everything that all clients have access to.
One of the things that we do is weekly trainings. We have a training with our agents, and one of the resources that we have as a realtor is here, METROTEX. So education.
100%. One of the things you need to do, it is part of your duty to educate, share the information that you learn, because your client, your next customer, they're on social media. So as you get information in and you verify this is great information, put it out there. And be a part of the movement, be a part of the advocacies. Unidos US is a big website that I go to get all my data, to let people know what's going on, because again, they're very misinformed. We just have to speak louder than the others.
I love that. And I do think as one of the Nahrep 10, principles is advocacy. So in that, a lot of programs have been mentioned today that, other companies provide or other lenders provide. I would love your insight on what your go-to product is, or a product that is coming up that you would love to share, or one that you offer. So that way we can educate our realtors that are here on the best pathway to get their consumers to sustainable homeownership.
Yeah, so First Horizon, we are a full service bank, and myself as a loan originator, my favorite product is our Home Start Mortgage. It's 100% financing, no MI. It is a 30-year conventional fix, and minimum credit score is a 620.
My product is a little different than what you're going to hear from them. My product is people. So for those real estate brokers, for those real estate professionals, for those realtors, for those brokers, for those financialists, Most realtors don't have lunch with an appraiser. Most realtors don't have lunch with the home inspector. Most realtors don't have lunch with an insurance agent. Utilize your resources. They're there for you and they're a wealth of knowledge. Not to get off on a tangent, but many of you have been in the industry for 20 years and have no idea how to price out. I'm just being very blunt. I'm the guy who will tell you what you don't want to hear but need to hear. And I get it all the time. So I'm the guy who you'll send a rebuttal to, who'll say, well, I found these comps. Well, all your comps are the worst that you're giving me. So utilize your resources and people, go have lunch with an appraiser, pick his brain. Go have lunch with the home inspector, pick his brain. Go have lunch with the title company. Go have lunch with the loan officer. Don't try to do this on your own.
Let me tell you a story. About 15 years ago, I came to one of the Nahrep meetings. You know, we started maybe like 25 years ago doing these those trainings. And we had that time we had people coming on the panel. They brought people from out of state, very professionals. And the one thing they recommended is to do home buyer seminar. So I told my wife, Laura, hey, I think we need to do home buyer seminars. Yeah, let's do it, go over there, excited, How do you do it? We were not even prepared. So I had to take some classes and public speaking, and start, to understand, we're trying to meet everyone with professionals. We bring inspectors, we bring appraisers, we bring loan officers. We have a lot of people that will work, it's giving back to the community, we push it, every month we're just doing it. Our homeowners there, they were down. And we had a couple of people show up on our home bar side. So we had to switch gears now and do a different kind of home bar seminars because it wasn't working no more. And our current administration, they shut down a lot of programs. So we have to now move into a different direction where the last couple of seminars, we have over 50 people in our home bar seminars. And it's changing. And people are afraid, and this is the time where we are going to be educating all those people. So, try.
Exactly what he said, absolutely. There are about 6 million kids that are US citizens from parents of undocumented people, and they don't know what they don't know. So a lot of these Gen Zs and millennials, they grow up with parents teaching them, work hard, be a good person, do this, do that, but they haven't taught them how to manage money, how to buy real estate, and so that's where, you come in and be that person. Just, you can't be the master of all things. So if you're really good at something and you have a lending partner or a title partner and, there's this one product that you really love, learn all of it, master it, and then just go get that. There's plenty of business for everybody.
I definitely do agree with that. I am also a lender, so I'm with Bank of America, and I will say I've sent deals to PJ, I've sent deals to other lenders here, because it is about community. So one thing that your answers help me piggyback into our last question is, how do you get started? How do you help yourself be highlighted as a community advocate and somebody that the community trusts?
I'll take that. For me, it's social media. I am here to say that you need to be in front of your people. You need to advocate for them. You need to be on social media. I don't know anybody that is not on a face, right? My mom is on Facebook. Everyone is on Facebook. And so you have to be able to master how you explain this information. And if you're not able to pick up the camera and say it in front of your own phone and post it, then you haven't mastered it yet. So you have to keep practicing, learning, and consume and share.
And even though I'm young, I'm a little bit more old school. I like to say boots on the ground. So I am out in the community physically partnering with organizations like Catholic Charities, Dallas Habitat for Humanity, Inner City Development Corporation. We just did a home buyer fair this weekend at the MLK Recreation Center in Southern Dallas. So physically being out in the community, whether it's a dinner table or being that local expert to share what you offer.
I think that the fact of being able to differentiate yourself, there's a lot of realtors in here and a lot of you have the same accolades. When you're multi-certified or multi-licensed, you have the knowledge of more than one person. So just to give you an example, and please don't take this the wrong way, if I have a listing and you have a listing, and I say I have these 7 licenses and they're all in the real estate industry, I think the odds of my stealing your listing that one individual said he could never steal, I believe I would steal them. Just to give you some information of, you can never be too good, you can never have too much information. I'm a little different creature. I'm a firm believer in a jack of all trades. I'm prior military, I did 13 years, and I went from cleaning toilets to being the #1 aircraft mechanic in the United States Navy. So you can do whatever you want to do. About me, I'm not bragging, I'm just indicating you on how you need to differentiate yourself. This is extremely competitive industry. And just being good at one thing, I don't think is going to get you there.
One of the things that we do is, like I say, monthly home buyer seminars, but we also participate with our community. We recently, well not recently, like 2 years ago, we moved to Dallas, all places, and my wife went to Addison, I went to Sunday High School. We met there, But, we participate in the backpack program, school programs. Recently we do the Cinco De Mayo parade, so we joined the Grand Prairie Hispanic Chamber of Commerce, and that's what we're doing. We're trying to be out there. Like you say, right now it is tough, and if you're not posting, if you do 1 post a week, now you have to do 2 or 3 or 4, or maybe you have to post 3 posts per day. And we gained my wife gained a builder where the other people were not doing Facebook Live. Hey, they see what we're doing, and they say, hey, I want to be part of that, you guys. And you guys start showcase our listings. But sure, and we never thought that we were gonna get those listings, but we did it. So you have to do 3 times more now because it's gonna be tough. For everybody, it's gonna be tough. So you have to be at the more.
That's beautiful. I thank y'all. I wish we had more time for more questions, but they are going to be around after if you would like to pick their brain and ask them any questions. But thank y'all all very much. Thank
We have a number of thank yous to give out. First of all, we want to thank PNC once again for you all flying out. Y'all came in from Ohio and DC, and y'all brought in Fannie Mae with us from DC as well. So we appreciate you, Vanessa, for coming out. We also want to thank all of our sponsors. As you see that we stay connected with our people. We've had past presidents on our panel, so we really appreciate everybody coming out and supporting us. Now, we want to say, I'm going to give my CEO of my company a heart attack, because we have a happy hour, and it's sponsored by Sure Living. We purchased about a couple $1,000s worth of food and drinks for us on everybody. So it's at the Reserve, and it's about 6 minutes down the road. So food and drinks on Sure Path Lending. And we'll see you all over there in a few minutes. We also have a raffle, and we talked about this before. We're giving away a $750 ticket to go to Proximo in San Diego. Now, travel is on you all, right? But to get to the Proximo is about $750 to $800. Put your card in, you better get it in there if you And once we get to the restaurant, we will do another drawing as well. So there will be 2 given away.
Also, we want to to say happy birthday to our amazing board director, Claudia. Happy birthday, feliz cumpleaños. We love you. Happy birthday to you. Happy birthday, Claudia. Happy birthday to you. Happy 21.
All right. So this one is short, we're gonna hold this right here. And she can reach in her hand. And we'll check it up better.
Okay, 1, 2, 3. Goldman Bright, real estate, and it's Israel Flores.
Israel Flores.
You have to be
Oh, he left. Globe Light. Michael from Globe Light?
Michelle.
Was it Michelle?
Michelle, sorry.
Michelle from Globe Light? There she is.
But you have to promise. You have to promise, girl.
Oh, yeah, so we will get with us, we will shoot everything together, we need to get in contact so we can send you all the information.
Sounds great, thank you.
All right, thank you very much. There will be one more drawing at the restaurant. All right, y'all, seriously, we want everybody to attend and to show up at the reserve.